First thing that we should realize is that the constitutional functions of government could be satisfied without an income tax. Right? And about 80 or 90% of the federal government is for socialist purposes now. So those of us who love socialism probably love the income tax. Now maybe there's some of us who love socialism but don't love paying the income tax themselves. But anyway, bottom line is it wouldn't be needed. And the income tax is predominantly for the purpose of redistribution of property, taking it from those who have earned it and giving it to those who haven't. It's Karl Marx's doctrine of from each according to their ability, to each according to their need. I believe in the opposite philosophy, and that would be from each according to their desire, to each according to their ability to pay, or from each according to their willingness to produce, to each according to their desire to consume, based on their ability to pay. Anyway, let's get into the insidious, hideous tax known as the income tax. That term income. Well, first off, that's a mind blower, a mind bender to begin with. Income, what does it mean? Well, to some people, it means everything that comes in, right? Income, here it comes in, right? But is that what it means for tax purposes? I think we all know it isn't. Because we know that, for example, a business can have $500,000 a year gross income or $500,000 a year income, but that's not the subject, or that's not what's being taxed. They say what's being taxed is net income. Okay, what's net income? Well, again, the term income is still nebulous there. Income was defined way back when by the Supreme Court as being gains derived from labor or capital, or they're both combined. Gains derived from them. So basically, income meant gain. Gain. Okay? Gain. So if they say, we're going to tax net income, what are they talking about? We're going to tax net gain. All right, well, it's kind of weird. How can you have net gain? All right? You can only have gain, right? If you have all these expenses to pay that you write off of your gross, then, and what you're left with is income, how could you have net income? Kind of odd. Well, maybe if you did have net income, they turned around and said, okay, out of your net income, we're going to exclude, $4,000 or $5,000 for you. And then so what's left, we're going to call taxable income. All right? So, but still, using the term income, it means the gain. All right? So you're going to have net income, gross income, and there you go, head starts spinning. Anyway, the courts have decided that gain is what comes from the profit that comes from labor, from capital, or they're both combined. Now, when you get paid, and you're just a little worker guy, you consider that check you get on Friday or once a month or twice a month to be income. There's my income. My income. When you sit down there and you figure out taxes, you say my income is $30,000, $50,000, $80,000, whatever you figure it is. And you think, well, that's your income, because you think of income as being all that comes in instead of gain. Now, if you thought of income as a corporation would think of it in the sense of taxable income or net income, that would be your real gain after all expenses have been paid, after all the rent, all the electricity, all the labor costs, all the office supplies, the toilet paper, you name it. After they have been paid, then what was left over would be income. If you ran if you operated that way, then if you made $1,000 a week, after you paid all your expenses to exist, you know, what you pay for a car, what you pay for your home, what you pay for everything else, then what would be left, if you're like a corporation, would be what your gain is. So if it costs you $900 to live a month out of 1,000, then you might say, well, I gained $100. That's what the corporation does. So looking at income in that light, people start to look at it in a little different light. If you're selling your labor for $50 an hour, $20 an hour, and your employer pays you that much, then evidently it's worth that much, and so there's no real gain, is there? Now, I'm not saying you can go to the IRS and use this as an argument, because actually they're the masters of trickery, deceit, and fraud, and they'll just claim that what you're doing, what you're arguing, is a frivolous tax protester argument. So I'm not saying that you would do that. I'm only saying that you should think about the term and start to wonder, what the heck's going on here? Now, think about this. If the government can claim a portion of your labor, any portion of it, as an automatic basis, then they own that labor, don't they? Now, it would be a little different if they said, this week we're coming in and stealing a part of your paycheck. That would just be theft. It just stole it a little bit. But if they said, every hour you work, we're going to take 20 cents out of every dollar you make, then you have to give that to us first. Or if it's 1 penny out of every dollar, if they can determine that, people that you consider to be your servants, if they can determine that, then they're your masters, and you're their servant. If they can say, you get to keep 99 cents out of every dollar you earn, they still own your labor. They're being benevolent despots to you in only taking 99 cents out of the dollar. I mean, leaving you 99 cents out of the dollar. There's a point with every one of us where we say, hey, this is slavery. What's the point with you? I don't know. At the point, I've already reached that point a long time ago, and say, you know, I'm refusing to be a slave. So this video, we're just clearing up the concept of what is income and what's freedom in regards to your labor and who owns it, the government or you. And in the next video, we'll pick up some decisions about the Supreme Court has made in this regard. So this will be the end of this one.